Did you know that most of the Bitcoin news you read this week is either exaggerated, misunderstood, or flat out meaningless? Plus, the overload of information is actually paralyzing your ability to make good decisions about your money. Every headline screams crisis or euphoria, and no wonder people panic, freeze, or make terrible decisions. That's exactly why we created the Bitcoin Reality Score. And it's a tool that cuts through the hype, the noise, the clickbait, right? So, and in this video, we're going to be talking about the 5 biggest Bitcoin stories of the week and running through them with the BRS tool to reveal what's real, what's rubbish, and what actually matters for your long-term wealth. Let's get into it.
Awesome. Thanks, guys. So quick disclaimer, as always, David and I are not financial advisors. All investing is risky. Investing in Bitcoin and digital assets is extremely risky. We recommend that you speak to a fiduciary before making any investment decisions. Nothing that we say in this video should be interpreted as financial, investment, tax, or legal advice. We will do our best to provide a balanced view, but our models can be wrong or outdated. So just bear that in mind. As David said, we've got our BRS tool that aims to separate the narrative from the reality. So we're going to get rid of the fear, the greed, the incentives, the noise, the subjectivity, the bias, and we're going to replace it with the facts, the figures, the metrics, the data, and the objectivity you need to do your own research. So the first story of the day is that Turkmenistan is opening the doors to crypto, taking a historic shift from the headlines would have you believe, from total prohibition to national legislation. Now, this new law appears to signal, according to the headlines, a major economic modernization push from the country, positioning it as a surprising new entrant into the digital asset space. Now, the shift in a lot of these articles, according to the tool, is framed as Turkmenistan is embracing crypto innovation. And the articles frame it as the introduction of licensing, mining, registration, and tokenization as a positive towards full participation in the digital asset market. But is it really true? The narrative implies that Turkmenistan is catching up with its regional peers and potentially even the world and becoming a new hub of regulated crypto activity. But is that even right? So here's what the tool has picked up. So yes, the good news is there is a law that was signed and dated November 28th, and it does become effective, or should become effective, January 1st, 2026. Nice little thing to start the new year with. But there are some major red flags the tool has flagged with this news story. Essentially, the licenses are needed for exchanges, custodians, and miners, all of them. If you're involved in the crypto space, you got to register with the government. There's also strict anti-money laundering and know your customer rules, and cold storage of these digital assets is mandatory by the government entities. Credit institutions are barred from offering crypto services. So not like yesterday's headlines where we saw big banks in America getting involved. That is still no longer acceptable in Turkmenistan. The state can also halt or void token issuances. So although they're seeing crypto, sort of recognizing in the bill crypto as an object of civil rights, they make it very clear it is not a currency. In the same way that those miners, custodians, and exchanges have got to be regulated, mining and mining pools must register, and covert mining is banned, and it will be rigidly enforced by the government. So although this does reflect a regional trend that we're seeing in other countries like Kyrgyzstan, Uzbekistan, Kazakhstan, there have historically been major bans which have included raids, sieges, and it's led activity has been driven underground by use of VPNs. So this country is not starting from the most pro-crypto stance. Now they claim that it's driven by modernization and diversification from their natural gas dependence. And the figures and the stats do back this up. It does make sense to them on a macroeconomic scale to do this. They've made clear, however, that crypto is not legal tender, and making that it's not fully liberalized. So this is partially just a symbolic move. So another way of looking at it is that the state oversight plus their ability to halt token issuances significantly limits the openness of this. So David, before I show you the score, I'm going to get you to take a guess. in terms of how impactful do you think that this event will be on the future of Bitcoin? 10 being the best thing that could happen to Bitcoin, and a -10 being the worst.
Right. Well, this is when just reading the narrative, it really sounds bullish. That it opens the door, it paves the way for kind of legalization and regulation of crypto within the country. But Turkmenistan is a relatively small country, and I'm thinking, well, it doesn't have a large economy, so the investment kind of strength of that region is not that strong. So I'm initially saying a three, but even that could be high, because when you share the facts, it's like, well, there's a lot of catching up to do to actually in the infrastructure to enable this, and the regulatory framework needs to kind of catch up to all this. They could say it just in the news, but what does that mean in kind of delivering the reality of this investment?
That's
So
it.
I would say,
so you're saying a 3.
I'm saying a 3.
Let's see how you scored. Oh, you were close on many points. You did say that the narrative was pretty strong with this. However, due to the country's size, it is limited. So the narrative the tool pulled out was about a 5, so about medium strength. This isn't gonna, the narrative alone isn't gonna shake markets in any way. But the narrative is basically telling you that Turkmenistan is opening up its doors to crypto and joining a global digital asset modernization wave. That's the way they've pitched it. And I saw a lot of these headlines are sort of coming directly out of Turkmenistan or being influenced by Turkmenistan in terms of the pitching. It's really, they're trying to pitch it as a modernization push. But what we can see, the reality of it, is that although the law is real and detailed, it's heavily controlled. Licensing, AML, KYC, cold storage, state override powers, and no legal tender status. That brings the score down massively.
Yes.
But it's still a moderately positive structural step with real legislation. If this was just being talked about, that score would be a bit lower, but the fact that it's detailed, it's written up, it's got firm dates, etc., means that that score is increased. The one thing that does lower it down is that, as you correctly pointed out, the technical plus enforcement readiness in a closed economy will bring this score down for now. So, as you said, technically, they can have the law down exactly as they have. They can have the correct digital modernization incentives. They can say that they need it for economic diversification. But at the end of the day, technically, how are they going to do it? How is it going to play out when they're saying that they're going to control everything? Even despite their laws being very clear in terms of how they've documented what is legal, what is not. The question is can Bitcoin flourish and can digital assets flourish in that kind of environment? So you were close. A bit slightly too high, but you did call it out that you could have been too high. I'll give you a relatively spot on for that. So overall, yeah, you're right. Mildly positive for Bitcoin via global regulatory normalization, but heavily constrained by Turkmenistan's high surveillance model. So yeah, if you see headlines telling you that this is a people trying to make you think this is a major move, it's not, at least not for now. And overall, the impact, because of those strict AML KYC laws, even the upside from here is very, very limited. But if you're interested in this story and you want to watch out, obviously you can look for any licensing announcements once this law goes into effect, specifically from exchanges and miners. Obviously, if you start to see more and more of those, that is a really good sign for the country. The State Commission implementation activity, are they giving any updates on how the implementation is going? Are you seeing any participation for foreign investors? Are they rigidly enforcing those AML/KYC laws, or is it just one of those things where do as I say, not as I do? Like they're not really enforcing, they're just claiming. And also mining registration volumes. How many miners are you actually looking at getting registered within this scheme? Next story, same part of the world. So Uzbekistan is charging ahead as a regional crypto leader. That's what I see when I see a headline like this. So the headline reads, "Revolutionary, Uzbekistan's bold 2026 stablecoin payments plan transforms the crypto landscape." Now, as I said, the tools correctly pointed out that the emotions that would drive in people are that this country is charging ahead as a regional crypto leader and that they're embracing stablecoin payments and tokenized securities in a bold 2026 rollout. Now, from reading these stories, the narrative is that the country appears to be modernizing exactly the same that we just saw with Turkmenistan, but not just in terms of crypto, but its entire financial system. And it's positioning itself as the Central Asian hub for digital innovation. So the narrative suggests that they're completely opening its economy to global capital, using blockchain as an incentive to elevate its technological profile. They've actually developed a regulatory sandbox, which they spend a lot of time in these articles talking about, which is framed as this forward-thinking, pro-innovation environment, enabling businesses to experiment with stable coins and tokenized assets. So overall, the story paints Uzbekistan as one of the most progressive emerging market adopters and signals a major shift in mainstream digital asset integration. At least that's what the headline would have you believe. But what's the tool been able to pick up? So good news, same thing. And strangely enough, the same dates applied to the Turkmenistan. But yeah, they will legalize stablecoin payments, and it will come into effect January 1st, 2026. So a lot happening on the start of the new year. They have provided clarity on the licensing and AML. And look, better to know the sandbox you're playing in as opposed to not knowing the rules of the game. So clarity in this instance is a good thing. Tokenized securities will be permitted, but once again, slight negative under licensed platforms. The sandbox, which they've gone out from what the tool can tell, is real and will be and will test the payment infrastructure and tokenized markets. Like Turkmenistan, however, there's tokenized KYC and AML, but the wording doesn't seem to be as strong within the legislation. There appears to be a bit more flexibility. However, stablecoin payments are allowed only through controlled channels, which obviously would be why they've bothered calling out those KYC and AML protocols. Stablecoins are treated as financial infrastructure, not speculative assets. That is a good thing. That type of wording does add credence to the initiative and does show that they're actually, in some level, endorsing blockchain and digital assets. Now, the tokenization efforts will include stocks, bonds, and real estate, which I personally love to see, because it's not just that they're going to trial these things. It's that they're going to trial one thing at a time. They're actually going to trial multiple things. So they're really trying to modernize. And this, what they've labeled their Digital Uzbekistan 2030, aims for cross-border digital leadership, which they've actually called out. And they're actually going to host the M360 Eurasia 2026 event, which is obviously a big move. So it is part of a regional trend. Obviously, we spoke about Turkmenistan before, but some negatives. The implementation does depend on infrastructure upgrades and supervision. So the central bank has also called out that it's cautious and fears monetary policy spillover. So hence the way they've set up the sandbox. They're going to do it, but once again, it's going to be in a controlled manner with good visibility. But from what we can tell, their AML and licensing rules aren't as stringent as those in Turkmenistan. At least that's what the tool was interpreted. So David, where do you think this is going to score?
You know, considering Turkmenistan's score was 2, I'm going to say it's actually slightly more positive. Like, I'll say 2.5, just because I think it's still solid news, but it's still dependent on the infrastructure catching up with it, right? It's still highly controlled, and it's within a regulatory environment that's not yet matured.
Okay, let's see. Close. You were right in that it's scored higher than the Turkmenistan story. So that scored a 2, this scored a 3. So let's just look at the narrative. Now, the narrative here is already stronger. Yeah, it's because it's not just focused on one small thing. They've actually made a push in the media to promote themselves as becoming a regional crypto leader by legalizing stablecoin payments, enabling tokenization, and pushing forward a major digital modernization agenda. But the reality is, yes, it is a robust framework that they've developed, but it's tightly controlled, coming from 2026 onwards. And it's a focus on stable coins and tokenization, not Bitcoin, which obviously, because this is a Bitcoin-centric tool that tells you the impact of Bitcoin and Bitcoin's long-term viability, decreases the overall positive impact. So what's the reality? Yes, it's a real meaningful piece of legislation. So if you do see articles about this, know that they do have some validity. And it is a meaningful, structurally positive move. Stablecoin payments and tokenized markets, however, will be under strict regulation with limited openness, but, and here's why it's scored higher, high clarity. So once again, the main risk here, why it's scoring a 3 and not a 3.9, it comes down to technical feasibility and the level of supervisory capacity for nationwide implementation. Are they actually going to be able to do it? We don't know. What I would say is that the tool is correctly called out, that this isn't just being done in isolation. The fact that they've got this whole digital Uzbekistan 2030 strategy plays into part of a wider, more long-term focus, which is why this actually scores higher than Turkmenistan. So well done, David. You're getting closer with your scores. That's
nice.
Good. So what to watch out for? Interesting. If you can find it, the sandbox pilot outputs. So what kind of results are they getting from it? Hopefully they publish some of those. That would be great to see. The list of approved stablecoins, which stablecoins will enter on there? Will it just be stablecoins that maybe they'll launch their own stablecoin? Maybe they'll only launch those that have been that align with their geopolitical alliances, or maybe they'll just go for the big players like USDT or Circle. Remains to be seen, but it'll be interesting. And obviously, tokenized market licensing. So, are we going to start to see licenses come through for tokenized stocks, bonds, or real estate? Obviously, that would be good to move that industry as a whole forward. So, overall, long-term, a moderate long-term positive for Bitcoin via global regulatory normalization and stablecoin utility and tokenization expansion. So, 3 out of 10. So, on to our third story of the day. Another player, believe it or not, from the space. And this is why, even though these stories seem small, that the tool has actually picked up on them and that we've decided to highlight, because it really shows part of a regional trend that is going on. So if you look at these countries in isolation, you see the scores, you may not think it's a big deal, but when you start to see all these countries in the same geographical area making these moves, it starts to build up. So same type of news. The headline says Kazakhstan to invest up to $300 million in crypto assets. Now, reading through the stories, what the tool has pulled out is that, once again, the narrative in these stories is deliberately meant to be extremely bullish. They're meant to make you believe that there is some groundbreaking move happening. But essentially, it pulls out that Kazakhstan is positioning itself as the first major nation in the region to openly accumulate Bitcoin as a strategic reserve asset. Senior officials appear to be hinting at large-scale Bitcoin purchases, at least according to the articles that are out there. The government seems to be moving decisively after the market crash, taking advantage of cheap Bitcoin to strengthen the national reserve. And the story portrays Kazakhstan as using their strong gold and FX base in order to diversify into Bitcoin, which obviously elevates Bitcoin's global legitimacy. So overall, the narrative would have you believe that there's a geopolitical turning point in the region, with Kazakhstan stepping out triumphantly ahead of its neighbors and potentially triggering a regional sovereign adoption wave. But what are the facts? So the headlines are a bit deceptive. The BRS tool has actually picked up that it's not that they will go and buy Bitcoin. It says that Kazakhstan may invest up to 300 million. So they're not necessarily going to invest all of it. They're going to invest up to 300 million in crypto, not just Bitcoin. A lot of the headlines and a lot of the article content are focused on Bitcoin. And it may be that a significant portion of that does go into Bitcoin, but it is set up for crypto assets, not just Bitcoin. Now, some other good news. Kazakhstan's prior behavior, so mining regulations, the Binance partnership, and they've got a fund called the LM Fund, all supports the plausibility that they will actually follow through with this. Statements come from named officials, specifically the governor and the deputy, which adds real credence to this story. It is part of a global trend. We've just seen that there are other countries in the region making moves, as well as other countries like El Salvador and the UAE conducting pilots, and obviously El Salvador launching a Bitcoin strategic reserve. Now, with regards to the funding source, The tool has picked up that the claims that they will use or could use gold and their FX reserves are feasible given their macro constraints. It actually makes sense for them to do this. But they did call out a bit of bad news. They did call out that the decision obviously depends on post-market crash conditions. Now, Bitcoin's price has dropped from the high of 126K down to 81, and it's currently sitting around 90 at the time of recording. Now, so what they've made clear is that they're going to wait and see how the dust settles before making their moves. So obviously, we'll just have to wait and see how that plays out. Now, in terms of the good news, they do maintain a high-tech plus digital assets portfolio already. This isn't something extremely new to them. They do have the legal and infrastructure frameworks for crypto investing complete, which is obviously another major plus, I should say. But the National Bank of Kazakhstan governor has emphasized, as I just called out, that there is no rush and it needs conditions to stabilize before they make any move, which means that even though we may think this is going to happen very soon, it may not. It may be that we go into a bear market for an extended period and they don't make any moves in the near future. Now, Kazakhstan, as I said, already has a state-backed crypto fund, which I just want to draw your attention to again, which is the LM crypto fund. And the reason I want to call that out is because they're actually partnered with Binance, which is obviously a major player within the crypto space. So David, compared to the other two stories, where do you think the tool put this, higher or lower than a 3?
I would say higher because I find this more bullish than the previous two stories, just because the plan is real. It seems to be like they have a history of this. This isn't their first kind of time into it. It seems credible and funded. So, but the thing that kind of tempers it a bit is kind of what you put in the reality. They said it may happen. It may happen, right? It's still not confirmed. They did. It's buying up to 300 million in crypto, right? And although they're using existing kind of gold, they actually specified how they're going to be funding it with gold and FX reserves. It's still, it could be 100 million, it could be 50 million. Up
Correct.
to makes me a bit nervous.
It could be nothing. It could be $1. For all
exactly right. Exactly. So I'm going to give it a score of 3.5 to 4, and in that range.
4. Okay, let's see. Getting closer still. I mean, if you'd just gone for the 4, you'd have been closer. So let's just tap on the narrative. By far the strongest narrative. Obviously, Kazakhstan, thank you, Bora, is a bigger regional player. It does have a good history, which means that preparing for the headline that Kazakhstan is preparing for a major sovereign Bitcoin buy does have a level of credibility. But the truth is that they are exploring crypto, not just Bitcoin accumulation. Yeah, they've got the infrastructure in place, which is good, but the size and the timing, as you correctly pointed out, remain cautious and conditional. As we said, they're waiting to see whether the market stabilizes. What happens if it doesn't stabilize for a long time? They may never make the move. It may shake them down to the core.
True.
So yeah. So either way, this is a credible, moderately sovereign positive development. Structurally supportive, feasible, which is the big thing. They've said how they're gonna do it, but not yet transformative. So in terms of why this got degraded to a 4.2, but it could be a 6.8 if they actually follow through and specifically go through with Bitcoin purchases and at the scale of 300 million. Now, the reason why this is scored 4.2 is because of those unknowns that we spoke about. But here's the thing. There are public statements from the governor and deputy chairman, as I said, which have publicly confirmed their intent. That obviously increases the score. It's not just hearsay. It's coming from reliable figures. The infrastructure through the LM fund, sees Bitcoin, and ETF exposure is already in place. So they can do this. We know that they can do parts of it. Kazakhstan does have a history of experimenting with digital assets and digital asset policy, and their gold and FX reserves do indeed give them funding optionality. So it's not like they're getting fixed to one way of actually funding it. That does give them the ability to move in and out. But as I said, Post-crash caution and wait for the dust to settle, their words, reduces the certainty. So this can't be a 6, can't be a 5, it's got to be a 4.2. So a strong, meaningful long-term positive for Bitcoin if Kazakhstan proceeds. So what to watch out for? The first official confirmation of purchase size. So if it was 5 million, 10 million, 50 million, 100 million, and what asset that was made in. Publication of formal reserve diversification strategy. So how are they planning to do it? What are they planning to invest in? Statements from the IMF, BIS, Russia, or China on Kazakhstan's move. Now, obviously, on a geopolitical basis, Kazakhstan has its allies and countries that it makes sense for it to partner with. Number of those, China especially, and the IMF as the sort of the big baddie hiding in the corner, are notoriously anti-moves like this, as proven with El Salvador and the IMF making their loans conditional with El Salvador. So any movement from them and any denouncement may stop them from actually implementing this, which means the score may decrease even further. And then maybe keep an eye on the movements within LM's fund holdings to see if there's any expansion or if it goes down, because that's what I would keep an eye out. And obviously, most importantly, considering they called out that it's dependent on the price stabilizing, I would keep an eye on that. Let's hope that Bitcoin goes above 95K for an extended period, because obviously that would increase the probability, and you'd watch this score drift from 4.2 more towards a 6.8. So the next headline that we're going to really quickly go through is, you see headlines like this: Bitcoin mining resurges in China, quietly defying the government ban. So you read this and you're like, oh, wow. So China is quietly returning to Bitcoin mining, reclaiming global influence after previously abandoning the sector. Now, the headlines have you believe that Bitcoin is banned but booming. That's the narrative that's going around, and that China is the number 3 global mining power in the global is number 3 of the global mining share in the world, despite the ban. So the headlines obviously are implying that China is covertly increasing their Bitcoin stack, despite the state posture. So it's a strategic shift. Now, the market interprets Chinese mining as powerful demand and hash rate support. So that is also good. So it's not saying, hey, a big player that tried to ban Bitcoin, that actually had a large and significant amount of the mining pre their 2021 ban coming back in, is actually going to more miners, means more hash rate, means the network is more secure. So this story, it really ties mining resurgence to the Chinese-US rivalry, and saying, hey, the US has really been making moves with Bitcoin. Maybe China is making the same moves. So these type of headlines are really making you think there is some kind of, not to use our buzzwords, but game theory dynamics going on here. But a couple of days later, just 5 days after these headlines started to circulate, China's central bank reaffirmed the crypto ban and flagged stablecoin risks following multi-agency meeting. So what are the facts? Well, as I said, we do know that China was banned in 2021. However, the hash rate share, although it dropped to near 0% after that 2021 ban, it has rebounded to 14%. That has been confirmed by the hash rate index. And also, what's interesting is CryptoQuant, who are a relatively reliable source within the crypto space, estimates that the hash rate could be as high as 15 to 20% for China. So yes, they are in many ways confirmed as the 3rd largest Bitcoin mining location on the planet. So this speculation, there is a lot going for it. Now, what are some other stats that the model has picked up to verify whether this is actually true? Well, Canaan, which is the world's leading manufacturer of Bitcoin miners, an Avalon miner creates value for the Bitcoin network. Basically, their revenue has surged from 2.8% to over 50% now, which validates that there is domestic mining activity within China. And the likelihood is that obviously this AI push that we are going through right now, and that is driving markets, and some would say sustaining markets, has led in China to overbuilt data centers, which obviously create excess computing capacity and excess electricity, which needs to be mined up. So that is why potentially all these miners have come back online. But don't forget, the mining is still officially banned. But the enforcement does appear, according to the tool, to be uneven. And we know that because obviously we see the moves that are going on in Shanghai and Hong Kong specifically around things like their stablecoin posture, and it's shifting more to positive. So the rising Bitcoin price, obviously it spiked to 106K, 126K, has actually pushed for made illicit mining or regional mining more profitable. So whether it's illegal or whether it's state endorsed, either way, it's been more profitable for them to do it. The incentive structure has been there. So officially, though, there's no legal reversal, which means there is structural ambiguity persists. So between the overall narrative of this, David, of these stories, where do you think this will place?
Well, this confused me a bit. This is kind of a good example of do as I say, not as I do, right? So they've said it's banned, and many years ago, and they banned it many times in the past, right? But we all know that the Chinese government is mining it, and they're doing it secretively, and as you rightly said, the game theory. So it's like it's positive that they're kind of we're reminded in the media that they're continuing to mine it, and that represent 20%. That's quite strong of mining activity globally, but it's kind of like a non-event. It's like, okay, well, one cancels out the other. It's like, yeah, it's positive that they're mining, but we know that they don't kind of publicly announce that they encourage or that they support Bitcoin.
Can I just stop you there?
Yeah.
Because obviously we want to show that the tool works. So I thought what we need to do is to say, well, no, despite this, it seems really positive. Do you mind just re-recording that, if that's all right?
Yeah, no, you're right. Yeah. I'm just thinking about that. What do I do?
You basically say, look, despite the bans, like despite their official renouncement, the truth is in the facts. Yeah, the fact is the hash rate has gone up, and they are number 3.
Yeah. So I would say I would see that. Yeah. Good. I'll redo it. Okay. Yeah. I'll do it again.
Yeah. So, David, where are you landing with this one? Do you think it's positive or negative?
Yeah, I think it's positive, considering they banned it and they were really against it, or they are really against it, to show that where we have 15 to 20% of active Chinese kind of hash rate. That's quite bullish. That's quite strong. And so I would put it up at like a 3 or even a 4 to say, yeah.
So I mean, I when I ran these stories through, my forecast, my prediction, obviously, as I'm running the stories, was I'd have actually put this as a 5, because what it was showing was, hey, you can't stop Bitcoin. Yeah. And you may, in the same way that yesterday we spoke about these big players like JP Morgan, Bank of America, and Vanguard fighting Bitcoin, the same way the People's Bank of China and the Chinese Communist Party have. Well, actually, what it's showing is you can't fight that. So I actually forecast this. I was slightly more bullish than you. I was a 5. But the facts speak for themselves.
Oh,
so
interesting.
Yes, the narrative did agree with us in many ways, but it said that all of this basically comes out. The reason that this can't create a strong narrative is because China was so quick within a number of days to reaffirm the ban, because there is they've just made their stance very clear. All these different narratives actually end up competing against each other and actually forcing the narrative down. So the narrative here is actually bad, because any short-term lived benefit that we saw from the narrative, like spreading around the internet, big China now accounts for the 14% of global mining power. Yeah, it's come back despite the ban, etc. The reality is, it remains illegal. Now, in terms of what the facts are, it does call out, despite that narrative drop, the facts speak for themselves, as you correctly called out, that the fact that they are responsible for that 14 to 20% of mining power is still a net positive, which unfortunately means that in terms of how good or bad this could get right now, it's actually slightly negative, because the rising hash rate helps security, but national hostility from the Chinese Communist Party just negates most of the upside. So in terms of why the regulatory softening probability is low, the fact that they reaffirmed the full illegality, they made very clear their stance on November 28th. The fact that the mining resurgence is therefore, at least on paper, unofficial and not policy backed is also a negative. 14 to 20% is great, but it's not officially sanctioned. And ASIC rig sales, although they're rising, and that equals economic incentive, it's not regulatory support. So all these are just indicators that point to maybe a story being true. Maybe there's some game theory going on, and maybe the Chinese Communist Party is strategically buying assets through stealth, buying Bitcoin through stealth, or accumulating Bitcoin through stealth. But yeah, those regional incentives do conflict with the national stance. So overall, Chinese mining comeback helps the Bitcoin network security, but the reaffirmed national ban and no change in policy cancels out most of the long-term upside for now. So things to watch. Enforcement signals on illegal electricity use. If you see the Chinese party actually, as you said, watch what I do, watch what I do as I say, not as I do. If you actually start to see them doubling down again and actually going after these miners, then that's something to watch out for. That would cause this score to actually drop lower from a plus 0.1. Now, the People's Bank of China updates tied to stablecoins or capital controls. If they get harsher, or if they start to take more of a rigid stance on stablecoins, that will be a negative, cause the score to drop. The hash rate data showing China rising to over 20% will be a positive in many ways, although it's not good for centralization, that much being in one country. It is a positive in the respect that the higher that rises, the more it adds credence to the idea that this mining could not be going on and without some level of endorsement under the table. It could not be going on without them enabling it, because they have such control over the country. So same thing with domestic ASIC sales and resales, if you see them spiking at auctions. And obviously, if you see any regional power subsidy or data center policy shifts, either for the positive or negative, those would be things to watch, which cause the score to go higher or lower. But overall, a bit disappointing with this headline. It just shows you cannot trust anyone on X or anyone in the news, because they're all pushing their agendas. But the tool has correctly pointed that out. So yeah, glad to see the tool worked, but overall a bit disappointing.
Yeah, agreed. Yeah.
So last story of the day, and it is very much linked, but essentially global Bitcoin miners face a profitability crisis caused by the fact that many miners are pivoting towards AI and leading to further centralization risks rising. So essentially the headlines, and there are multiple of these around from really reputable sources, that say Bitcoin miners are facing a catastrophic collapse with profitability at the lowest point in many, many years, if not history. And mass shutdowns of miners are underway. There's a large-scale exodus from Bitcoin to AI, and it's accelerating, implying miners are abandoning Bitcoin because the economics of running miners no longer work. These stories frame Bitcoin mining as being an existential danger, with major companies converting entire facilities into AI compute centers. So the narrative suggests that Bitcoin's network could face security risks, reduced hash rate, and potential centralization as miners exit. Overall, it paints a picture of industry-wide distress, implying Bitcoin mining may be entering its most unstable era since the China ban of 2021. David, I pulled out, the tool has pulled out a few of these headlines from these different articles. What do these headlines make you think? Worst profit crisis ever, dumping reserves, hash price at record lows. Does it make you concerned?
Yeah, it makes me want to sell my Bitcoin, even though I will never sell my Bitcoin. Right. It seems like it's fear mongering. It feels like it's really bad. You know, I've often thought about this, all these big data centers that are, and how profitable is it to be mining Bitcoin during this kind of dip in the markets of about 35%, right? For Bitcoin, and the surge in computing power and energy consumption of AI, all these big data centers. So I would imagine that this is a big threat to the future of to supporting the Bitcoin price.
Absolutely. And the fact that so many of these headlines have popped up really adds a high emotional intensity to it. And obviously, what it's really framing is contagion. So there's going to be this negative contagion that is spreading across the market. So I always take, when I see headlines like this, which are clearly, and wording like this pulled from articles, which is clearly meant to initiate a very negative emotion amongst the reader, I always take it with a pinch of caution. But obviously the model did go and check the facts. And unfortunately, what it did pull out is that obviously the Bitcoin miner revenue from fees is at record lows. So you can't even really see it on the diagram. But right over the bottom right-hand corner, do you see how that line is flat and blue?
Yes.
You can just see that their profit, the miner revenue profitability from fees is at record lows. So for once, this isn't just, there is actually some truth to this. But let's just elaborate into it. So the tool did pull out that the hash price did hit historic lows of $34.49. Yeah, the facts therefore confirm real stress. It hit that on the 21st of November 2025. So miners therefore are shutting down rigs and selling Bitcoin reserves. This has been confirmed with over 30,000 Bitcoins sold within a 48-hour period, which does obviously add credence to why the price has been dropping recently. Now, the difficulty obviously remains extremely high, and that's even after 2 downward adjustments. Obviously, what you want, if you're a Bitcoin miner, is you want difficulty to decrease so that your likelihood of attaining more Bitcoin is increased, so that obviously you can become more profitable. You have more miners. You're getting more Bitcoin for all that energy you're expending. But unfortunately, that hasn't happened because, as we saw with the China story, the hash rate just keeps increasing. Great for Bitcoin security, but not great for these miners. So there is definitely, it has confirmed there is a profitability squeeze. It's not just narrative farming. Yeah, it's not just fear mongering, but it is happening. Now, what it is also confirmed, it checked the points about the AI pivot and confirmed, yeah, there are actual examples of this happening. Bitfarms has pivoted over 341 megawatts to AI, and CleanSpark is securing AI compute contracts. These are big players in the game, and they are making moves to diversify their into AI as opposed to just Bitcoin only. Obviously, not good for Bitcoin. But the good news is it's not industry-wide. Hash rate remains at historical all-time highs, above 1 zeta hash, and obviously there is no immediate security threat. So that is something good. As I said, if hash rate was dropping as well, I'd be a bit more concerned. There is a probe, obviously, from the DHS of Bitmain, and it is real. A lot of the articles called out that as another reason to be scared. And one of the other players that we can see that has made that possibly has taken this profitability into account is that Tether, who is the largest private holder of private company holding Bitcoin, has actually halted their Uruguay mining due to energy cost instability. So, as I said, Bitcoin mining share in China has increased to 14 to 20%. That's some good news. But there is consolidation, and it is accelerating despite the hash rate at all-time highs. So the conclusion is this is bad, but not catastrophic. So it's a moderate negative reality. So based on that, David, where do you think this is going to score? Obviously, we've had a few positive falls. Firstly, do you think it's going to be bad or good for Bitcoin from what you see?
I think it's going to be bad for Bitcoin. I would say a -4, -5.
-4, -5.
Yeah.
I actually scored this after reading the facts of what the tool churned out. I actually scored it a -6. I thought this could potentially be really quite bad. But what did it say? It said, yeah, the narrative that the miners are collapsing, abandoning Bitcoin, and pivoting to AI, and therefore threatening network security. That's a really bad narrative, and it's really strong, and it has spread quickly. It's all over Twitter. It's all over mainstream news sources. It's really getting out there. That is not good. But the reality is unfortunately that mining profitability is indeed at historic lows. Consolidation is accelerating, but the one silver lining is that security remains extremely high. It is still the most decentralized and therefore the most secure network on the planet. And the hash power is at all-time records. So how bad or good could it get? Now, I don't want to sugarcoat it. We always try and just give you the facts here on this channel. And I know we do talk about a lot of stuff that's bullish, but this is something that you really do want to pay attention to. It is a significant structural negative for decentralization, not existential, but materially harmful if prolonged. Now, why is that? Well, it's because there is something that has happened this time which has not existed in previous cycles. So the tool correctly called out, which I hadn't thought about, is that although miners have survived worse cycles or really bad cycles, such as 2014, 2018, 2020, 2022, and 2024, the resurgence of AI is really going to cause them a problem. So although this would be scored higher, this would be scored worse, but the fact that, as we said, difficulty does adjust downward automatically, which means there can potentially be some good on the horizon, potentially, if that hash rate does lower slightly. High efficiency miners do consolidate and emerge stronger. Their hash rate remains at all-time highs, and profitability crunches have historically not damaged Bitcoin's long-term integrity. So that is the good silver lining. But as I said, thing to bear in mind is that there is something unique here that the tool has pulled out, and that is that this is not just miners struggling this time. This is, for the first time ever, miners can earn 2 to 5 times, from what the tool estimates, more revenue by reallocating electricity to AI compute, switching off the miners and using that towards AI. So we know that publicly listed miners like Bitfarms and CleanSpark are announcing AI transitions already, which means that this is actually happening. It's not just conjecture. GPU compute demand is globally unstable, which obviously does mean that if nations see AI as globally important, are they going to really crack down on Bitcoin mining to free up that electricity to reallocate towards AI? Very, very plausible. Bitcoin mining is therefore no longer the most profitable use of stranded power, which really does undermine one of the key Bitcoin is good for the environment narratives. So don't get me wrong, this is a really negative story. And hardware geopolitics, as I just mentioned, obviously increase systemic fragility. So overall, it's a large expected value negative due to miner stress, rising centralization, because obviously those miners that can't compete go out of business. But those, as I pointed out, or as the tool pointed out, those other miners consolidate and they become bigger and stronger, which leads to more centralization. Now, at the moment, that's not a big problem because we're not seeing huge amounts of that. But there are risks that if the longer this goes on, the more centralization we could see. And obviously the alternative revenue migration towards AI at the moment is real, but obviously we just don't know the scale of how big it could go.
Well, what's interesting is it started from a -7, the narrative that's kind of causing people to panic, but it's what the tool has done is it's tempered it to say, you know what, we've seen cycles like this before, right? This is what miners do during down markets, right? They want to continue to be profitable. I think this is going to be more like where they're going to supplement and augment their mining capabilities, and they're going to add AI to that. It's not that they're going to get out of the Bitcoin space and they're going to stop mining Bitcoin altogether. They're just going to be kind of growing their opportunities and balancing their workload, right?
That's it. So, I mean, that's one thing that the tool did pick up. It actually called out that, so a lot of the time when miners reach low profitability, they're forced to sell just to make sure that they can pay the bills, pay the electricity costs, pay for new miners. They need to stay competitive. Bitcoin mining is one of the most cutthroat industries you can be in. But what the tool actually pulled out is the reason that this score didn't score lower, either on the how bad can it get, which is a -4.9, or the final score, which is obviously the right now today, which is a -3.9, is the fact that yes, players like CleanSpark are making these moves into AI, but what it correctly called out is that a lot of these players are potentially doing it in order to ensure that they don't have to sell their Bitcoin. As I said, if they can earn 2 to 5x more revenue, in fiat of these other activities, they can allocate a small amount of their electricity and their facilities towards doing that, which actually makes them profitable enough to survive these down markets. And suddenly, one of the biggest sellers in the 4-year cycle turns into a hodler. And so that is why, for any of you questioning why, if this score doesn't seem low enough for you, that is one of the key reasons. It's the fact that we just don't know. The tool agrees this is definitely negative. A -4 is bad. I don't want to sugarcoat it. That is bad. But because of the unknowns, the risk is medium, and it could go. There could be some positives to it, some real big positives. So anyway, things to watch out for. I spoke about it a couple of times. The next difficulty adjustment signals if miners exit. You want to watch if miner reserve balances start to drop. So that means that there's capitulation. Things are getting worse. If GPU and AI pricing versus ASIC pricing increases. If the Bitmain regulatory outcomes, obviously the investigation starts to get worse and there starts to be more pressure. And obviously, if there is more hash rate concentration by region or company, that is never a good thing. So where did we land? This is the updated scorecard, taking into account the items from yesterday. Now, obviously, in yesterday, we spoke about BlackRock, we spoke about Bank of America, we spoke about Vanguard, we spoke about JP Morgan. And I'm just going to explain to you how these scores fit in. So what was the strongest story of today? Let's have a little bit of a recap. Kazakhstan scored the strongest today because the plan is real, it's funded, and it's credible. As I said, 2 senior officials confirmed they may buy up to 300 million in crypto using existing gold and FX reserves. And the country already has crypto infrastructure in place. High feasibility with at least a high probability, which leads to the highest score of today. It sits in the middle of the pack, however, overall, because it represents a real sovereign action with funding, political backing, and existing infrastructure, far stronger structurally than Vanguard's story, which is access only, and JP Morgan, which is a niche product. The impacts aren't as high. However, it does score lower than BlackRock and Bank of America because those 2 stories reflect far larger, system-wide institutional shifts which affect tens of millions of clients and trillions of dollars in assets under management. So their story, although it's good, although it's definitely one you should monitor, would never score higher than that. So Kazakhstan's move, while significant, is smaller in global scale and still awaiting execution. So what about Uzbekistan? Well, Uzbekistan's score is also quite high, but slightly lower because their reforms are scheduled for 2026. It's still in rollout mode. Strong structure, yes. However, delayed execution. Solid piece of news, but not as meaningful right now as Kazakhstan's move. Likewise, Turkmenistan's legislation is real, but extremely controlled. I mean, David and I spoke about that at length. Licensing, AML, cold storage, state override powers, no legal tender status. All of this limits the openness, which is why it scored a 2. It's a good headline, but heavy restrictions mean that it ranks weaker than the other nations' moves. On a less positive note, China's mining increase scored neutral because the resurgence is unofficial while the government doubles down on the 2021 ban. But hopefully we can all agree that despite that, the big story of the day is the global mining crisis. Now, this scored sharply negative. You may not see a -4 as that bad, but it is. This score, because it's not just a cyclical downturn, it's real structural stress. Is the hype overblown as of today? Well, maybe, yes, but record low hash price, mining capitulation, rigs shutting down, miners pivoting to AI, Bitmain geopolitical risk, and rising centralization pressure all mean it scored poorly. And all that means there is high probability, unfortunately, the trend continues. So once again, the Bitcoin 1% BRS tool reveals what survives once you strip away the hype, strip away the fear, strip away the greed, the narratives, the incentives, the manipulation, and match the story to the real world. David, have you got any final thoughts for our viewers?
Well, it's an amazing kind of run through of all the biggest events that really what the tool has done a really good job of doing is tempering the hype and actually really helping to kind of recalibrate uh, expectations and how we should be really considering and reminding ourselves of the long-term play. A lot of these are short-term shocks to the market, right? And it could be hype in a positive sense as well, but actually, it, when you consider it with the kind of grand scheme of the news and the kind of the long-term strategy of most companies, I think it's yeah, it's good.
Yeah, awesome. And look, guys, as I said, these are stories that now they're in the tool, they will be monitored. Yeah, we will be maintaining a top 10 list of the stories that you should maintain. And those stories that are in the list, we will tell you if they're dropping off and that we're no longer going to monitor them. And we also will be, just so those of you that are aware, we had a few comments on obviously our stories appearing to be too bullish. And that is why we've got the tool. We are fully aware of a lot of the challenges that are currently within the Bitcoin space, and we are going to do separate videos on them. The difference is that we'll probably leave them to one news event per video to really give them the time and the analysis that they deserve. So don't forget, guys, that above all of that, if you are not aware of what is happening in the Bitcoin space, there is a risk that you'll be like the rest of them, because most will miss it, most will mock it, and most will wait until it's too late. But the 1%, they hit with conviction.
Be a 1%er.
Thanks, guys.
Later, folks. Bye-bye.